Hello and welcome to another MCO update on ADA. The ADA chart continues to be in a broader range that is located between the $1.18 level. This is the swing high from early March and very close to the previous highs from early January, and the previous swing lows around 51 cents. So this is the range in which we're operating. We're currently in the middle of the range, so it's not really a great trade location on the daily chart because we're now in the middle of a range, far away from support, far away from next key resistance. But obviously that's the main reason why we're also tracking the smaller time frames, the micro patterns, because they give us, let's say, early warnings. They give us levels that are a little bit closer to the price at the moment, yeah? So pay attention to the shorter time frame patterns as well, but I wanted to start here on the daily chart. So we are all aligned and we all have a really good understanding of the structure, what's going on here, and that we are basically just moving in a sideways triangle. That's still the idea. Obviously, such a triangle can go both ways, right? It's a triangle. I'm tracking this currently as a wave 4. It's probably not complete yet. At least there is no strong evidence it is complete. And as I said, it's tracked as an A, B, C, D, E pattern. So it's a complete looking triangle when we have the E wave done. For now, we seem to be in the D wave bounce, which, if you watched previous videos, you know is defined as a so-called WXY pattern. So we have this initial move up as a wave W, move down as an X wave, move up as a Y wave, which again is an A, B, C structure. So that is how it's being tracked as a WXY pattern. And what we can do as well is define here a trend channel, a parallel trend channel, see if we can come up with a trend line that, so a broader trend channel, right? So then we also get a trend line that can support the price as we go lower. It might even make sense to add it to the smaller time frame in a minute so that we have, in addition to our Fibonacci support area, also a trend line that we can check and track. So bottom line is, I'm tracking this as a WXY structure. The condition is that this B wave holds above the X wave low. That's located around 64.6 cents. Below that level, we might have to consider that maybe we are already in the E wave, okay? But this would be the next stage then. For now, the main level or the key invalidation point is around 64 cents. Below that level, we've got the 51 cent level because this is really the main level. Because if we drop out of this pattern and say, okay, we might already be in the E wave, which is the last wave in the triangle, then this comes with a clear invalidation point. And this invalidation point is at 51 cents. So if you look at the structure there, then you can see that the previous swing lows are both around that level, 51 cents. And it's important to understand that the E wave must never break below the C wave low. So that's a crystal clear invalidation point. Yeah, and I would say that we should now probably take a look at the smaller time frame. It's just to understand the wave is likely still unfolding. Upside breakout point is at $1.18, $1.17. So let's take a look at the shorter time frame. This is interesting, particularly in the very short term for early signals. What I'd like to do as well, I will add this trend channel to the smaller time frame as well. There you go. And it seems like the market is respecting that quite well at the moment. We might want to adjust it just a little bit here. It's a bit more precise on the shorter time frame. And if you watched previous videos, then you know that we were watching here for this pullback into the support area, which is defined between 68.6 and 77.2 cents. So you might now ask, but I obviously mentioned this level down here, 64.5 cents. Well, there's a difference between support, Fibonacci support, and the invalidation point, right? There is a difference. If you're wondering what that is, check out my video about it on the MCO Global channel. I only uploaded it, I think, this week or end of last week, a tutorial that explains the difference between invalidation points and Fibonacci support. But yeah, there is this ideal support area, and we're currently moving down into support, and it's defined as an ABC structure. The idea is, and that's what is in line with other charts as well, that this here could be an ABC structure of wave A. We have a resistance on the chart. A break above resistance indicates we're already likely on our way higher towards 94 cents next and the top of the channel. But a larger B would be quite likely. So this is sort of what I'm watching for at the moment, right? But either way, this is the zone where we want to see a reaction. After a 5-wave move up, it's at least reasonable to see this here as a corrective pullback, which should unfold as an ABC structure. Now, please note, this initial move down from the 12th of May high is already a 3-wave move down. So do we need a wider 3-wave move? Absolutely not. We don't need that wider correction. It's enough to have this initial ABC structure. But it will depend on how the next rally is structured. If it's just corrective in nature, weak and choppy, then it might very well be that the price is indeed just in this B-wave corrective rally. Resistance is between 85 cents and 79.7 cents. And then if we see a reaction to one of these levels, they're clearly on the chart, a C-wave down might begin. In addition to that, this resistance area will be adjusted with the price. And if the price goes a little lower, then it will have to be adjusted. So it's a moving resistance area at this point. A little lower is still possible, potentially to 74.6 cents to complete wave C of A. Yeah, that's the update on ADA. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.